Prologis stock, ticker symbol PLD. This stock is up 8% on the 1-year chart, underperforming the SP 500. But as of lately, the stock is really getting some momentum since the beginning of October 2023, due to different reasons. On the 17th of October, Prologis reported earnings with a beat on FFO and revenue. And people love PLD stock because of multiple reasons. One of the main thing being the dividend, and I understand why, with dividend yield at 2.6%, and of course the current growth streak. And if we take a look at the past 5 years, we see that Prologis easily outperforms the SP 500 by 40%, and this is including dividends. So could this be the perfect time to buy PLD stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Prologis do? Prologis was formed by the June of 2011 merger of A&B Property and Prologis Trust. The company develops, acquires and operates high-quality industrial and logistic facilities around the globe. Prologis' portfolio consists of 5,559 buildings with a total of 1.2 billion square feet, of which most is in the US. And that is also reflected in this sheet, where we see that 86% of the NOI is coming from the US and 14% is outside the US. If we look at the most recent earnings, we see that revenue was reported at 1.9 billion, up from 1.75 billion. And here it gets interesting. Both the net earnings and FFO were down year over year. And if you take a look at the net earnings per share, we see that it went down from 1.36 to $0.8. To me, this is a big problem. The core FFO went down from 1.73 to $1.3 per share, also a big problem, especially since this is one of the most important numbers here. Dividends are covered very well with 0.87 dividends paid and $1.3 in FFO. And here we see once more the net earnings, core FFO and the AFFO. Year over year the number is decreasing, so definitely keep an eye on this number. On the 17th of January, Prologis will present their 2023 fourth quarter earnings. And in here we see the current expectations with a net earnings per share expectation of $3.3 to $3.35. Core FFO is expected to be in a range of $5.85 to $5.6 per share. Average occupancy is expected to be around 97%, which is a great number. And the same store NOI also looks really good to me. In here we see the portfolio breakdown. On the left we see that Prologis has a great diversification when it comes to type of goods, and on the right we see the top 10 customer breakdown. We see some big names in here. And the top 10 tenants represent 14.6%, which looks really good to me. Amazon is the biggest with only 5%. The top 25 is sitting at 20%. And in this sheet we see that net debt to EBITDA is sitting at 4.3, which is a bit on the low side. And in this case that means the safe side. And I prefer a range of 5.5 to 6.5, so there is some room to grow here. Another important thing here is the A credit ratings. To me this looks really good. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people in the community. And to talk about stocks, it's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Prologis is a 125 billion market cap company. P/E ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 26, indicating they might be overvalued. Later in this video I will show you my 3 price targets for PLD stock. So make sure to watch until the end, because price to FFO is only telling a small part of the full story here. And in the meantime, please let me know your thoughts on the current valuation on Prologis. And I'm also interested to hear your thoughts in general on this company. Revenue is at 7.8 billion, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. We see that margins are going up in the long run, which is of course really nice. However, ever since 2022 margins are decreasing, so keep an eye on that number. EPS is showing similar trends as the margin and revenue. For a REIT it looks pretty decent. Analysis expected from here EPS gradually increases to $5.65 in 2028, and we see 16 to 26% growth per year. For the revenue it is also looking very interesting, with an estimate of 13 billion in 2028, and on average around 12 to 13% growth per year. Return on assets is sitting at 3.8%, which is a low number for a REIT. Return on equity is also looking a bit low, and the most important number, return on invested capital, is sitting at 2.1%, which is again a low number, even for a REIT. But it is slightly higher versus the average, so that's the silver lining here. Current ratio is at 0.43, which is a low number for a REIT. Nothing special to mention here. Historically it looks pretty good to me. Right now Prologis has 28 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. PLD has 744 million in total cash, so they can't pay down a big chunk of their total debt, and this is something that I don't like. To be honest, this could be a potential red flag to me. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Although I prefer a bit more steady and better here. Another thing to keep in mind is that most recent number is not accurate in this graph. In here we see that it is not decreasing but increasing instead. Shares outstanding are increasing, which is very common for a REIT. They increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.6%, which is a great number. Annual payout is at $3.48 and payout ratio is at 62%, which is below the 75% average for REITs. The 5-year growth rate is at 12.6%, which is a great number. On top of that, they increased the dividends for 10 years in a row, which is really nice. In here we see the dividends paid since 2012, and to me this looks really good. Prologis really likes to increase the dividends at a high rate. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to grow steadily on from here. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare PLD stock with the overall market, in this case the S&P 500. Next to that I added EXR and FR, both competitors. And on the 5-year chart we see that PLD stock returned 142%, crushing the S&P 500 and both competitors by a significant amount. And this is including dividends. On the 1-year chart it looks pretty interesting, with PLD returning 12%, while the S&P 500 is really performing at a high level, with 21%, beating all the stocks in this list. On the 6-month chart it is again PLD that is having the highest return, and both the S&P 500 and the EXR are sitting at 7% return. On the 1-month chart it is the S&P 500 with the lowest return, which is quite interesting. So bottom line, PLD stock beats the S&P 500 in the long run, but also most recently it looks pretty good. And top of that, they beat 2 important competitors as well. So could this be the perfect time to buy PLD stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 36, 38 and 40%, and for the free cash flow margin I'm putting in 68, 70 and 72. For the PE ratio I'm putting in 20 since it is a REIT, and for the price to free cash flow I'm putting in 17, 18 and 19. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now PLD stock is at $131. I hit analyze and will see a lot of red numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $90. We have a mid price target of $112 and we have a high price target of $138. And to me the mid to high price target is the most justified here, indicating that this stock is kinda overvalued with a minimum upward potential based on these numbers. Please let me know the price target that you think is the most justified here in the comments down below. My final conclusion on this stock is that Prologis is a great company. They are rock solid and one of the biggest REITs out there. Most fundamentals look really good and are showing they can perform steady and grow at a high pace. However, the margin is something that concerns me a lot, and with the FFO as well. From a dividend point of view, I really get excited about this stock. To me, there are limited risks when it comes to the dividends. They pay a solid dividend that is growing at a high pace now. From a value point of view, things don't look that attractive right now. They are at a premium price and maybe it is justified for some people, but I prefer to wait a little bit longer to see if the stock price comes down a bit more. And with the earnings on the 17th of January, that easily could happen if they disappoint. So as I said a second ago, for now I will keep waiting and analyze them from time to time, since I really believe this is a great business. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.